Hi, I'm Jim Jubak, and welcome to my YouTube video for June 24th. The big news today is about an infrastructure deal, maybe. We'll talk about that in more detail in a bit. In honor of the deal, I'm wearing my Lehigh Valley Iron Pigs t-shirt. If you don't know what an iron pig is, look it up. Everybody should know about the core 19th century industrial process that built our global civilization. You can find more of my stuff on my free site, jubakpicks.com, with 3 portfolios. If you want more portfolios, more stock picks, more me, you can subscribe on my jubakam.com site. Okay, today's title is 5 stock picks for the infrastructure deal. Now, let's talk a little bit about the deal. It was announced today that a bipartisan group of 10 senators working on an infrastructure package, 5 Democrats, 5 Republicans, have struck a deal, and that the Biden White House trotted out the president, and he said, "I agree with that." Now, there's a lot of there are almost no details of this. We know that it's going to be $973 billion over 5 years, of which about $579 billion is new money. It's a very traditional definition of infrastructure: roads, rail. None of the non-traditional infrastructure packages, infrastructure elements in the original Biden White House proposal, which was much larger. Nothing about global warming, nothing about childcare, nothing about job training. So those things are on the table, off the table, whatever. The mathematics of this are also kind of still very shaky. Is this bill going to go through the Senate even with a bipartisan deal? Don't know. Mitch McConnell, the minority leader, has not said one way or another. And then, of course, there's the issue that more progressive Democrats really don't like this deal. They want the other stuff. So this is still way up in the air. But anyway, on the announcement of the news today, we had a big move up in the traditional infrastructure stocks. Let's look at some of those charts. Okay, so when you think of infrastructure, you think of big yellow machines and earth movers, and you're thinking of Caterpillar. And you see that Caterpillar has done a really nice job of moving up on reopening of the economy. And then down here, and when didn't really get the infrastructure package, and now it looks like we're moving back up. So this will be one stock to look at. As about 3 o'clock this afternoon, the stock was up about almost 3%. That's one traditional infrastructure play. A second traditional infrastructure play would be Vulcan Materials. And pretty much the same pattern, up on ideas that the economy is going to recover, and then down when we didn't get the infrastructure package, and now we're looking at back up. Vulcan Materials is a maker of aggregates, the stuff that goes into making concrete, that goes into roads, all of that. They are the strongest, their strongest region is in the southeast. Aggregates are very, very heavy. You don't ship them very far. So basically, if you want to build a road in North Carolina, you look to buy aggregates in North Carolina. So Texas, Florida, the southeast, big market for Vulcan. And those are areas where you're going to see a lot of, I think, traditional road construction, as well as these are some of the areas with the most threat from rising sea levels. So you're seeing a lot of plans for raising infrastructure higher, or building seawalls, or any of those things. So anyway, today the stock was up, let me find it, up about almost 4%. Okay. And then let's start to look at, this is still a traditional infrastructure play, but not as well recognized as Caterpillar. I mean, Deere is known for, instead of its big yellow machines, for its big green machines. They make agricultural equipment. But they also have, after an acquisition, really bulked up their construction equipment. They're now like number 2 or number 3 in the global market for construction equipment. So this is now an infrastructure stock. And you can see that it follows the same pattern. and we're now starting to pick up. The thing about Deere that's interesting is it's also a agriculture stock, which means it's also a commodity stock, which means that it's also a inflation stock. Basically, Deere tends to track farm incomes, and if farm incomes go up because the price of corn is going up, Deere does really well. So it's a way to play infrastructure plus inflation. And today, Deere was not up as big as Caterpillar or VMC because it's not known as an infrastructure play, but it's still up 1.2% or so. Okay, now those are stocks that I've added to my Jubak Picks portfolio in anticipation that we would eventually get a infrastructure package. I added them early. Caterpillar I added to the portfolio back in February of 2021. It's up only almost 5% since then. Vulcan Materials in March 2021 up about almost 6%, and Deere is actually down almost 7.5% since I added it back in May. The problem with infrastructure stocks is that they're not really cheap. So, you know, I mean, Morningstar, which does a fair value calculation, a very, very conservative fair value in my estimation, but it calls Caterpillar 31% overvalued, trading at a 31% premium. That's a pretty small premium for stocks in this sector. You know, Caterpillar is up almost 20% year to date, up 70% over the last 1 year. Deere up almost 30% this year to date, up 127% for the last year. So you're looking at stocks that have really climbed. VMC, Vulcan Materials, up about 100% in the last year. Okay, so if you don't own these stocks and you think the infrastructure deal is going to go in, you might try to, waiting further down the road until there's more certainty about infrastructure just means you're going to buy these at a higher price. If you want to be really conservative, I would go with Deere because you've got the farm stuff going as well as the infrastructure. If you want to be slightly less conservative but still very exposed to this, you could go with Vulcan because I think global warming is going to manage to produce a lot of construction no matter what happens in the infrastructure bill. Okay, if you already own those three, as I do, and you want to think about adding some more stuff to the sector, there are a couple things that you can look at. This is United Rentals. The things that they rent tend to be construction equipment. So if the market expands, you can either buy your equipment from a Deere or a Caterpillar, or you can rent that same equipment from a United Rentals. This makes them actually a very, in terms of infrastructure stocks, very volatile. You notice, and then this dips even more than Deere, comes back faster. And you're looking at a stock that is, I think, more overvalued than, say, Caterpillar or Deere. But on the other hand, that has more upside momentum if this deal actually goes through. If you get the timing on this one wrong, you can get really burnt. So I'm not going to recommend this one here, but I'm bringing it up because it's one of the other plays in the sector. The other stock that I would suggest, and this one I'm actually looking to add to the portfolio in the next few days, is Marietta Materials. This is a company pretty much like Vulcan Materials, but it has a different profile. Whereas Vulcan is stronger on the East Coast and the Southeast particularly, Marietta recently bought Heidelberg Cement, which gives it a big footprint in California and Arizona, expands them there. Those are big markets, especially California. So this is a stock that I like if I'm looking to expand my infrastructure plays. And it's a little less known. It hasn't quite climbed as much. But again, you see the same pattern. So if the infrastructure deal goes through, the stock is going to go up. You know, There will be more details on this tomorrow and the next day. There are still sticking points in terms of the actual counting of the votes. There's the question of one of the sticking points in this negotiation was how we're going to pay for this, and the Biden administration has been pretty adamant about not paying for it through a hike in the gasoline tax, arguing that that's regressive, that it is a tax that really falls on lower income people disproportionately, and they've been looking for other methods. The general news out of this is that they've found some way to compromise these things. We'll see what the details are. But anyway, if you think that the infrastructure bill will go forward, and I think there's a good chance of it, these are stocks to own. I own 3 of them. If you want to expand on that ownership, United Rentals, and my preference right now is Marietta Materials. That's my video today on 5 stock picks for the infrastructure deal. Remember, if you like this, like it, and please subscribe. And also remember, of course, my 2 sites, jubakpicks.com, which is free and holds the portfolios, Jubak Picks, and 50 stocks that have Deere, Vulcan Materials, and CAT in them. And then there's the subscription site, jubakam.com, which has those portfolios plus more for a total of 6. And one of the things I'd like to note is that, infrastructure stocks are obviously cyclical, but some of these companies are really, really well run and do really well in the long term. The one that I would mention to long-term investors is Deere. Deere's been in my 50 stocks, which is my long-term portfolio, since December of 2008, and it's up 833% in that period. So if you're looking for a long-term stock as well as a short-term infrastructure play, Deere is a very interesting choice. Thanks very much for watching. This is Jim Jubak saying bye-bye. Go Iron Pigs.